Hi everyone and welcome to a new pod. Today we have Richard from Tensor and Vector. If you are in the Solana ecosystem, you've probably heard of Tensor. It's a meme coin trading platform that's doing incredibly well. In this video, we'll understand his journey from starting out as a quant, then pivoting to do a startup, why he chose Web3 as the industry he wanted to start up in, the ups and downs, the lows and highs, especially when Solana was going through a bear, a lot of grit throughout the bear to build one of the biggest NFT marketplaces, and then once NFTs began to plateau, they pivoted to building a meme coin trading platform, which was the alpha in the last few months. If you're a dev, you'll understand the engineering principles at Tensor and Vector, how they hire, how big is their team, an inside look into the architecture of Vector and Tensor, and how an ex-quant researcher got into the Solana ecosystem and made it big. Let's get into the pod. Tensor is one of the biggest NFT marketplaces on Solana.
Think of it as a social network for traders. When you download Vector and you open it up, it actually looks very much like X, like Twitter, combined with a wallet.
Users on Vector or new signups or people completely new to crypto. A lot of this is for newer and newer users coming on to crypto, right? Market insight or product insight there.
This almost sounds like everything. A wallet, a DEX, trade meme coins. If NFTs are back, I'm sure you'll add NFTs in there so people can trade NFTs. This seems like one app that can do everything.
You can follow each other, you can comment, you can copy trade them. So that's actually the special part of it.
Hi everyone and welcome to the OnlyDevs Pod. Today we have Richard with us. He's the CTO at Tensor. Tensor is one of the biggest NFT marketplaces on Solana. And now they've recently pivoted to another product called Vector, which is a token launchpad. We'll understand their background, how did they start Tensor, how did they get into Solana, and all the technical challenges that come in building one of the biggest NFT marketplaces, and now token launchpad on top of Solana. So with that, Richard, can you give us a brief background about yourself?
Yeah, thanks for having us on, guys. So maybe a brief background about myself. I'm one of the co-founders and CTO of Tensor. As you mentioned, we've built two products so far, Tensor and Vector. I started the company with my co-founder, 𝗜𝗺𝗽, 3 years ago. Before that, I did a bunch of software engineering internships when I was in school at big companies like Shopify, Google, a startup, and then a trading firm called Citadel. And when I graduated, I actually did quant for about 3 years. So I actually was more on the research side than software side. Long story short, just after COVID, I had the startup itch and I wanted to go start my own company. And that's when I left my quant trading job to actually work on Tensor with my co-founder. So very non-traditional, where I went from software to research back to software, but it's all the same thing.
Got it. That makes a lot of sense. Would you mind taking us through briefly whatever you can talk about during your quant experience? What does a quant day look like?
Yeah, quant research is basically, well, specifically for what I did, there are obviously different quant research roles at different companies. So Google actually has their own quant research, and that's actually more to do with advertising or things that Google are working on than what I was doing, which is quant research for trading. TLDR, you are creating models, whether they are statistical or ML-based or deep learning-based, to try to predict stock returns and try to make money off of that. And so what I did was basically alpha research, which means you are trying to extract signal and convert that to predictions on where the stock price is going for thousands of stocks. I can't go into details of the exact methods, but they're not too dissimilar from stuff you would read in books. It could be linear models, like linear regression models. It could be ML models. It could be deep learning models.
I'm kind of curious about your crypto story from quants to crypto that is specifically NFTs. How did that transition happen? And also during that, I remember reading one of Alliance's blog posts to tweet about how you guys tried out many ideas before you came on to Tensor. So I'm really curious to hear about the journey from quants to NFT.
Yeah, it almost sounds ridiculous where I was doing equity research for U.S. equities, and we were actually using quite a lot of sophisticated techniques and a lot of data to predict stock returns, which is quite an efficient market. And then going into NFTs, it seems like there's a disconnect there. But actually, so what got me into crypto initially was the idea that crypto is basically the next generation's financial system. In hindsight, it almost seems inevitable. I don't think this was as clear to me when I first started, but now it's like, now that I've been in the trenches for 3 years, it's even more obvious to me that crypto will become the next financial system in due time. But when I started, I wanted to be in crypto because I could be one of the pioneers of the new financial system. Instead of working in the existing system where all the rules and basically the infrastructure and all that stuff was already set up, and you're just kind of this small cog in this large system, and there's not really much you can do to innovate because everything is just so rigid and legacy. Crypto completely changed that for me. And that was the opportunity I was going after. And then the reason why we went into NFTs was we felt that NFTs at the time, the asset class, was very under-financialized compared to DeFi. DeFi summer had just happened in 2021. There were a lot of interesting primitives that people were working on. Obviously, perps came around. That's, I guess perps came around during BitMEX's time, but perps on-chain came around. Serum was the thing. It was the first on-chain order book. So there's a lot of like sophisticated things happening in DeFi, but that wasn't happening with NFTs, which we felt like was the next big asset class outside of just fungible tokens. And so we wanted to basically build all the financialization primitives for NFTs and be the category king there.
Got it. That makes a lot of sense. And this was when I would assume there was some volume, some interest in NFTs. There were other people working on similar marketplaces. So were there other ideas you were pursuing, or it was very obvious that an NFT marketplace is the way to go?
Yeah. This is sort of insight into how windy the path of a startup is. So we initially started off with a completely different idea to an NFT marketplace. It was still in NFTs, but it was very like nerd snipey. So we wanted to build, our first idea was we wanted to build a pricing oracle for NFTs, which meant if you're familiar with DeFi, there are oracle services like Pyth, like Switchboard, Chainlink, that will provide you with reliable price feeds in order for someone to do liquidations or for someone to build perps on top. It's like a very fundamental piece of DeFi. And we felt like if NFT financialization was going to be a thing, the oracle was going to be a core component of it, and we want to win that first. And so we spent about a month building this oracle for NFT pricing, and we tried to sell it to a bunch of these protocols that were doing lending. Some of them were doing fractionalization, and so they all needed this oracle for NFTs. And we came to the realization that, after a month and a bit, only one protocol was willing to pay us money, and the other protocols were still very early on. Like they hadn't found product market fit. And we realized, okay, this is not, the timing isn't there yet. And this is actually a recurring theme that you hear across startups is like having the right idea is not sufficient. You also need to have the right timing. And we just didn't have the right timing for building this oracle. There just wasn't enough demand for it. And ultimately, we pivoted away from that and decided, hey, given that we've worked with NFTs and NFT data for a month or two, why don't we try to pivot into something that we can leverage our skills and the stuff that we've built into a new product? And so that's when we decided to build an NFT aggregator and ultimately an NFT marketplace.
Got it. That makes a lot of sense. And what are the technical challenges in building something like this? Is it like fairly simple? Once the contract is out, it's out, and you just have to index the, I guess, other marketplaces and yourself and make sure people can buy and sell. Is it a lot of front-end challenges? Is it one smart contract? Is it many smart contracts?
Initially, we built an NFT aggregator, and that's important because with any marketplace, there's sort of this problem called the cold start problem, where a marketplace has two sides. You have the buyers, or I guess the demand side, people who are showing up and buying NFTs, and then you have the people who are listing NFTs to sell. And that's the supply side. And generally, it's more difficult to bootstrap the supply side. Like, you need to convince people to list their NFTs on your completely new marketplace when there are no buyers. And vice versa. People are not going to show up if there are no NFTs to buy. And the cold start problem is, how do you get past the initial critical mass that you need in order to have a fully useful marketplace? And every marketplace company in the past have faced this, like eBay, Airbnb, Uber. They've all faced this problem. And one way to actually solve it is you ignore one side, or you try to like hack one side. So in this case, we hacked the supply side by just being an aggregator. And so we just aggregated all of these existing marketplaces supply, or NFTs, into one interface. And we just tried to build up the demand side. The challenge with that is, at the time, there were 3-4 marketplaces that had NFTs, and we had to aggregate all of them. And the untold truth about blockchains, especially on Solana, is that the data is very messy, where all of these marketplaces, they have their own account format. So I guess for those who may not be familiar, on Solana, data is stored into these accounts, and you actually have to manually parse them byte for byte. And all these marketplaces have different byte format, and they generally don't publish what that is. So you have to reverse engineer them. In order to get historical data, you basically have to parse all of their historical transactions. And again, they're all in arbitrary byte format, and so you have to, again, reverse engineer them. What's even worse, this is the third thing that's the killer, is all of these marketplaces at any time can change their format historically. And because everything lives permanently on the blockchain, you have to deal with these historical artifacts. And so that's, it's not hard, but it's just very annoying to deal with. It's like trying to parse an unknown wire format that can change at any point in time.
I also remember during the, during the heydays of NFTs, if I may say that, some marketplace. I remember this Twitter thread where people are talking about, how one NFT marketplace would also put their account states behind an API key, so that even if a user wanted to, for example, from an aggregator, if you wanted to, execute a sell or a buy, you can't do that without the API key or whatever their co-signer signing it, right? So how did you guys deal with it?
I think we are told in this, by being in crypto, that what's nice about it is everything is permissionless. You can compose on top of anything without talking to someone. But yes, with an asterisk that if a protocol, or I guess in this case a platform, wants to decide who gets to use their marketplace, who gets to aggregate on top of them, they can put in things like you mentioned, a cosigner that requires you going through their API, and they can decide who to give an API key to and who to not. Without getting to too specifics, we actually ran into this issue with the biggest marketplace at the time. They basically felt threatened that we might take away market share, and so they actually used this strategically against us from aggregating their marketplace. And TLDR is there's no real good way around it. Basically, what it came down to is when that happened to us, when they said hey, we're no longer giving you an API key, you can no longer aggregate us. We had to move fast and try to get to critical mass with our own liquidity before we were completely wiped out, because users couldn't directly buy NFTs off of this marketplace on our website. So that was actually probably the darkest time when we were building the NFT marketplace, when this marketplace cut off our access, and we had basically a timer, essentially runway, where we had to figure out how do we get enough liquidity on our own marketplace, or else people will stop coming, people will stop using our aggregator, and we ultimately die. And we ultimately figured out a way to quickly gain momentum, which was sort of our points in season program. And we were able to get past that critical mass to survive.
You mentioned it was the darkest time, so I'm kind of curious to know what how the team was like. What was the mindset of the team during that, and not just the founders, but also the early engineer, the early founding team. What was going through your minds, and how are you quickly adapting to changes? The reason I'm asking this is to kind of get a peek into the culture and how actually it is in the trenches for devs.
This is actually an important lesson. There's a lesson to be learned here, which is early on, before product market fit, you shouldn't be hiring. You shouldn't need to scale your team. There are only very few exceptions to that rule. But to answer your question, it was basically just me and my co-founder. Literally, there was no one else. We were building the product, just us two. We didn't hire anyone. We were running off of a hackathon prize money to pay for AWS bills, and that was it, right? It wasn't until after we got to like 10% market share and we started seeing a bit of momentum when we made our first hire, and that hire was a BD person. So we actually didn't have to deal with the problem of like having to pivot multiple times or having to like being in this dark time and having a bunch of employees or contributors on our team that we had to also, talk to and make sure that they were okay. So basically the important lesson here is don't hire until you see some inkling of product market fit, and you need to hire people because you're just completely slammed with too many responsibilities.
Makes sense. Very cool. So initially you mentioned you were an aggregator. Now you're a marketplace in itself. So just to understand here, is there just one contract that you had to write once, deploy it, and good to go, audit it once, and then deploy it, and everything else is just front-end challenges or indexes that you're building? I remember you guys introduced something for shorting NFTs. I forgot the name. It was eventually removed. I forgot the name. Where you could
price lock.
Yeah, there you go. Price locks. I would assume that's another smart contract to deploy. But is that so? How often are you guys deploying smart contracts, and what are the engineers working on other than that?
Smart contracts. One thing you'll realize is, I think in the last generation, basically in DeFi summer, the smart contract was probably the bulk of what devs were building and teams were building, and then the front end was a very thin layer. That was sort of like early DeFi, where people were like, okay, most of the hard part of it is like figuring out what the AMM mechanic is, or figuring out how to build Serum, an on-chain order book, and then you have a very thin front end. For NFT marketplaces, it's actually the complete opposite, where the smart contract is actually very simple. It's building a marketplace is like you literally just deposit the NFT, and then you have a price attached to it, and someone can buy that NFT, and you just make sure that the price that you're paying matches what they listed for, and then you send the NFT to the other person. That's a very simple contract. There's no complicated math. There's no risk analysis, unlike lending protocol or a perps protocol. The hard part is actually the data pipelines and ingesting, in our case, every single NFT transaction that has ever occurred on Solana since the beginning of time, tracking all the existing listings on all of these other marketplace contracts. That's actually pretty non-trivial if you don't know the account formats of all of these marketplaces. And you also have to have historical data so people can look up like, hey, what was the sale history of this NFT? All of that stuff, the data part was actually the hardest and the most time-consuming part. You just have to build this stuff, one, to scale to the throughput of Solana. So if there's thousands of transactions coming in on-chain, you still have to go through all of them, pick out the ones that are NFT related, and then discard the rest. And then the front end, of course, we had a pretty sophisticated front end because we were building an NFT marketplace for pros, which meant we had to have a live feed of every transaction that was coming in. We had to make our listings update in real time. It's not hard, but it just requires a bit of finesse and requires, a lot of attention to detail. And then we also had a trading view historical price chart. And of course, the data pipeline that goes into it is quite annoying to get right. So TLDR is we spent probably 80%, 90% of our engineering time building the Web 2 stuff, which is the front end, the back end, data pipelines. And we spent maybe 10% of the time writing the smart contract.
Interesting. And I would assume there's not a lot of development needed in Tensor anymore. The product is there, and unless you're introducing a new feature, on a day-to-day, an engineer doesn't have to really look at anything other than maintenance.
This is true for the NFT marketplace, but not for the reasons of hey, there's not much we can do here. There's actually quite a ton we can do with NFTs. But as you alluded to earlier, we started working on a second product because we decided we have to pivot out of the NFT market. About 9 months ago, we felt that the NFT market was basically stagnating. There was a very grim outlook on whether or not it'll come back, and it was entirely out of our control. Yes, we could basically spend 100% of our time and really think how do we grow this market? How do we bring back the excitement to the NFT market? To the NFT market? That's like a Herculean task. It's like saying like, how do we make people around the world trade more crypto? It's something that is very much out of the control of a single startup. And so we decided like, okay, let's not waste any more time on a market that is completely out of our control. Let's pivot into a new product in a market that is 10x, 100 times bigger. And that's when we decided to build Vector, which is actually a token trading app. So at TLDR at the time, we saw that meme coins were picking up all the attention from our existing user base of NFT traders. They stopped trading NFTs and just started trading meme coins. And we were like, hey, we have, 500,000, 1 million monthly active users. They all stopped doing this one thing, which is trading NFTs, and now they're trading meme coins. Can we leverage our distribution and build something interesting in the space of meme coins and tokens? And so that's when we decided to work on Vector.
So you started 9 months ago. Very interesting. And I guess you launched very recently, 3 months ago-ish. Is that right? Got it. So would love to. You said it's not. Oh, I thought it's a token launch, but you're saying it's a token trading platform. So I'm assuming people can swap tokens, buy them, launch them. So would love to know, again, the same thing. How much of it is smart contract logic? I would assume there's more than an NFT marketplace here. And there is also a mobile app that I saw. So, basically how much engineering time is going into front end, mobile app, back end, and smart contracts.
Yeah, it's even more asymmetric in terms of the amount of time we spend on Web 2 stuff like front end, back end, APIs versus smart contract. Smart contracts, until recently, it's basically zero. And the reason is Vector is really a front end aggregator on top of all of the dexes, the launch pads, for example, Pump Fun, and then bridges, which we're adding in right now. It's basically a front end that wraps it all into a nice mobile form factor so that anyone can ape meme coins directly from their phone with their friends. That's the whole premise, is you can trade meme coins socially with your friends on this app. What it is, maybe just to give your audience a bit of insight, think of it as a social network for traders. When you download Vector and you open it up, it actually looks very much like X, like Twitter, combined with a wallet. So it's a wallet in that you can do the same trades. You can trade any token on all the chains that we support instantly. So any token on Solana that gets minted, you can trade it on Vector. Any tokens that get minted on Ethereum, on Base, on Abstract, which we just added, and eventually all of the other major chains, you can trade that directly in Vector without having to, go to a website, connect your MetaMask or connect your Phantom, and click a button that's a signed transaction. Instead, everything happens within the mobile app. And then the social part is you can actually share these trades with other people that follow you, or just people in general on the app in a public timeline. That's sort of the key insight we came to, which is we can build a nice mobile trading app for tokens and for meme coins, but what are people actually doing behind the scenes? Once they make these meme coin trades, they're sharing it with their friends. They're sharing it on Twitter, they're sharing it in Telegram group chats, they're sharing it in Discord, and we want to basically package all of this social activity into a single app.
That's very interesting. That sounds like a social media app. Can people message each other, follow their trades, things like these?
You can follow each other. You can subscribe to each other, so you get push notifications directly to your phone as soon as someone makes a trade. You can comment on their trades and engage, so you can like or dislike their trade. You can copy trade them, so that's actually the special part of it, is when you see your friend trade, you might want to jump in and join the fun and buy the same token that they just bought. But there isn't messaging right now. We feel like we didn't want to get in the game of competing with all of these great messaging apps like Telegram or Discord. They've spent years and years making an awesome chat experience. We didn't want to compete directly with that. I think eventually we'll have group chats. Eventually we will have live chat. And eventually we'll have one-to-one messaging. But that's maybe a bit further down the road.
This almost sounds like everything: a wallet, a DEX, trade meme coins. If NFTs are back, I'm sure you will add NFTs in there so people can trade NFTs. So it seems like one app that can do everything. I would love to know about private key management here. Since people can copy trades while they're sleeping, I'm assuming you guys are having access to the private key in some form or fashion. Is that right?
We do not have access to the private key. Maybe I'll give you some insights to listeners. In crypto, the previous generation of mobile wallets and mobile trading apps, actually, I wouldn't even say mobile trading apps because I would say we are the first major crypto trading app that's built like a trading app versus built like a wallet. Maybe I'll talk on the wallet part. Most mobile wallets of the previous generation, they ask you to write down a seed phrase and they'll keep the private key in local storage. That lets you sign transactions within the app, and then it stores the private key in local storage, and then in theory, like the app itself can't access it, or they shouldn't access it, and everything is local. And so even if there's a hack on the wallet's API servers, your private key isn't exposed. Downside, of course, is you have to write down a seed phrase. It could be 12 to 24 words, and a lot of people who are not crypto native, like they don't really know what to do with it. They might write their seed phrase in like a notepad or like an online document, and they accidentally share that and they leak their seed phrase and all of their money gets drained. We didn't like that experience. So we actually looked into a lot of embedded wallet solutions. These are effectively non-custodial frameworks or services that are offered by these companies, these services. Basically lets you log in with an email or OAuth, have a private key generated behind the scenes on your local device, and all that being securely stored. So in our case, we use something called Privy. They use something called 𝗜𝗺𝗽 secret sharing, SSS, to do all this fancy cryptography so that the private key is never exposed to us nor Privy. Private key is still entirely local to the device when it does signing, and it's very, very difficult, if not impossible, to compromise that. So that's what we use. You log in with an email on Vector, or you log in with Twitter, or you log in with Google, or you log in with Apple ID, and a private key gets generated for you, and you are in control of that private key. We can't access it. Privy can't access it. Only you can access it.
Got it. And as long as I have access to my email, I have access to the private key.
Correct. And then you can, of course, add like stuff like MFA, like two-factor authentication. You can even go further and add in recovery mode, which makes it even more difficult for any potential compromises to get to your key. And at that point, you effectively have like full self-custody, if not even stronger guarantees than just writing down your seed phrase in like a notepad or something.
Got it. Very cool. And you're saying Privy doesn't let you guys even initiate transactions. The user has to initiate the transaction since they're signing it on their local device.
Correct. Everything has to be user initiated on Vector.
I'm kind of curious to know, how many of the users on Vector or, new signups are people who are completely new to crypto? Because whatever you just said about, the packaging this entire experience together kind of feels like a lot of this is for newer and newer users coming onto crypto, right? So I'm curious to know what that split looks like. Or is there any market insight or product insight there?
We very intentionally made it so onboarding was as seamless as possible because our ambition is to reach eventually 1 million, if not 1 billion people, if not a couple billion people, and become a Facebook-sized company, right? Where every single person in the world can use Vector. And the only way to do that is not have that high friction, crypto native onboarding experience where you're writing down a seed phrase. That being said, as of right now, most of our users are still crypto native, and that's because we're leveraging our existing distribution from our marketplace, getting all of those users onto Vector first. They tend to be higher volume, they tend to have higher spending habits, right? Because they're used to spending thousands and thousands of dollars on NFTs. Now you're just spending thousands and thousands of dollars on meme coins. And then we'll basically move out in layers. If you think of an onion, the core is basically our crypto native user base. And then we want to move outwards to adjacent layers. So the next set of users you might go to are people who are on centralized exchange. Maybe they've never been on chain, but they've used a Coinbase before or a Binance, and they want to start trading meme coins on chain. And so we'll get those on board. And it's very easy because it's still email login, Google Auth. They don't have to write down any seed phrase. And after those set of users, you might go on to people that have maybe never touched crypto before on a centralized exchange, but maybe they've traded stocks. And they can easily onboard to Vector because it's just an email login. So that's how we're thinking about expanding our user base initially from a core of crypto native users.
Since you're aggregating things from everywhere, do you already monetize, or what's your plan of monetizing eventually? Considering you don't have any of the finance there only yourself.
Yep. So the app takes a fee on top. It is a 1% fee, which means that every time you do, if you swap $100 from Solana to, I don't know, 𝗼𝗺𝗺, $1 of that goes to Vector, and then the rest of the $100 gets swapped on chain. One thing that's to note here is 1% seems high, right? Most trading apps, or actually most trading exchanges traditionally charge a much smaller percent. For example, Binance, I think, has their highest, I guess the lowest tier, like the default tier is 25 bips or 0.25%. Coinbase's pro offering charges 0.5%. Coinbase's retail offering is actually different. It actually charges 2.5%. So it's nearly 5 times as large as their pro offering. And the reason is retail is less sensitive to fees. And if you can provide value on the front end by providing interesting features that you can't get anywhere else. In our case, we provide social features where you can share your trades, you can copy trade people. All of that is stuff people value on top of the utility of just trading. And that's why 1% is actually pretty reasonable, because you get to share your trades with other people, you get to have other people follow you, and if they copy trade your trades, you actually earn a part of their fees. That's why people are willing to pay 1% to use Vector, whereas if you're just building a simple front end that connects to a DEX, no way you're charging 1%.
Okay, I have a very weird question. I'm unsure if you've thought through this and other people who've used Privy, but Privy seems like a mildly centralized company, even though they don't host your private key. But what if the government tells them to block signing in the future or something like that? Do people really own their crypto, or is this something that's been thought through? Because a lot of people are using Privy. Like every other company we've talked to, Jupiter we talked to, they're using Privy for Ape.Pro, which is their new product. So is there something that can happen if the government wants to block Privy?
In Vector, we let people export their private key. For people who know what they're doing, they can always export their private key as soon as they log in. They could, again, write it down, put it into like a secure place, and then they'll always have access to their funds. Privy, so anytime you have something that connects to something Web 2, yes, there is always that tail risk of censorship. If the government really wants to go to Apple or whatever and say, shut down your servers, they can always do that. You lose access to everything. They could, in theory, go to Privy, they're a US company, and say, like, shut down everything, don't let anyone access their crypto anymore. But we thought through this carefully, and there's always an escape hatch in Vector, which is the exporting the private key.
Yeah, and also you have this, with Threshold, you have this 2 out of 3 combination, right? Like, as long as you have 2 shares of the key, you should still be good. So the real scary scenario is like, the government goes after like all 3 entities, then you're kind of like screwed. But yeah, the odds of that are fairly low. Richard, I'm kind of curious. So from starting Tensor as like you like a kind of solo team, you and the co-founder, just a founder-only team, and growing it out into Tensor into a very large marketplace, and then pivoting to Vector. It's been quite a journey, right? I'm curious to learn more about how has the team shaped up, how you guys approached building up a team that reflects how you guys are, right? So I'm curious to know what the culture at Tensor is and how you guys built the team.
Yep. Maybe I'll talk on the culture part and then maybe the hiring part. So the culture at Tensor, all startups, I would say, are more fast-paced in general and more intense than a big company. So if you compare, any seed stage Series A startup and their culture, it's any successful seed stage and Series A startup, to the culture of maybe like a company like Google or Microsoft, for sure you'll notice a difference where startups, you are live or die every single day. You have to move fast or else the company goes out of business. That's the case, yes, for Tensor, but I would even say we take that a step further, where I would say our culture is even more intense. We feel like we want to work with the best people, the best technical talent, the best marketing talent, go-to-market talent, the best in class for all of the functions that we need at Tensor. And we want to drive that by having a high-performance culture, which means everything is guided by, are you outputting results? And if you are, then you'll be rewarded greatly, in comp and in responsibilities. And if you're not, then maybe there's, a different role for you, or maybe it's not going to work out. And we make that very clear at the beginning of all of our hiring processes, where, yes, we know that Tensor is very intense. It's not for everyone. But if you're a high achiever, this might be the place for you to really shine. And what that means, what that implies for our hiring process is we tend to be more lean and try to work with a smaller team versus a larger team. But the smaller team has a higher density of talent and a higher density of independence. And so actually, like, for a company of our that's generating as much revenue as we are currently from fees, you might say like, hey, you should start hiring, 50, 70 engineers, given that you have this much runway. But we're the complete opposite, where we don't want to become a large, slow-moving organization and have a bunch of like overhead because you have to manage 50, 70 engineers. In fact, we want all engineers, to basically run independently, to feel like they don't need to be managed, to feel that they have a ton of autonomy in what they can do, and keep that team small so that we can run as fast as possible and pivot if we need to. Pivot to a slightly new direction in the product or a slightly new tech that we need to build out without having to go through a bunch of organization.
That's very cool. How big is your engineering team right now?
We currently have 14 full-timers. We actually grew from 10 to 14 within the last month, and that's because we saw quite positive momentum from Vector that we felt like we needed to scale a bit faster just to make sure that we're ready to continue scaling Vector and dealing with all of this growth. So we're 14 full-time engineers.
And are you guys hiring for more roles?
We are doing it opportunistically. So you actually see on our job posting board that there is no engineer role, and that's because we are opportunistically hiring folks that we either know through our network or we've heard of that is really great, and we reach out to them opportunistically.
Jake, do you have anything else?
Yeah. So what does the makeup of the 14-member team look like? So again, like going from Tensor used to be like a website and a front-end heavy trading product to Vector or mobile app. So I would say, maybe I'm wrong here, but Vector is a much more social experience. I would say it's much more similar to building Instagram or TikTok versus building Tensor, right? So how did you? I'm curious to know how the team transitioned, or how did you guys kind of like bring through the change in mindset?
I don't think it's too difficult. I think they're both ultimately still consumer products. You still have to. I think the process of building the product is more important than like the domain of the product. Like in theory, hypothetically, let's say we decided to just build a social media app, no crypto involved. I think we can do a pretty good job at it. And that's because it's a process of fast iteration, trying out experiments, getting feedback from users, and having that tight feedback loop that makes that makes a team successful in building a consumer product. And I would say the process that we applied when building the NFT marketplace is very similar. Obviously, we've learned a lot since then, and so we've we're doing stuff slightly differently. That's improved, but it's very similar to how we're building Vector, where there's constant back and forth between our users, between internally, where we're thinking of like, okay, what do we build next based on what our users have given feedback on. And I think the crypto component, obviously there's crypto in the NFT marketplace, there's crypto in Vector. That definitely helps if you have domain expertise. And because we know Solana so deeply now, it just lets us move faster on building out the trading features of this of Vector.
Okay, I mean, so if I were to summarize this, the principal reason why you guys are so successful at, building something like that people want is, one, relentless focus on execution, ship as quickly as possible, and also very, very tight feedback loop into the product, right? So that your quicker iteration, knowing what works.
Exactly. Maybe the one difference between building the NFT marketplace, which was for the most part like a utility product, versus building Vector, which leans more heavily into social and basically entertainment, is that social and entertainment, figuring out what to build is actually pretty difficult because it's not as clear cut as building more utility. We just know that, what traders want is more advanced order types. They want limit orders, they want AMM pools for NFTs, they want more complicated filtering, they want to be able to see, this stat and that stat and this chart and this visualization. But for social, it is more the opposite, where doing less is actually better for the product. You don't want to make it too complicated. We have 15 different things going on, and someone who signs up to Vector for the first time doesn't know where to focus their attention on. And you'll see this with like all major social media apps, except maybe for Facebook. Or Instagram, it's very simple, right? It's literally just a single feed, and then you can post photos and like photos. That's 90% of what people do on the app. Same thing with TikTok. 90% of the time, you are watching videos, just scrolling and liking videos, and maybe commenting. So
one thing the common denominator amongst all of these apps that you mentioned is that they're incredibly sticky, right? They have extremely high recall. People keep coming back. So compared to something like, trade, Vector, people still do trade. I think the stickiness there is people making money. But if the markets, so you have two things, right? One, you have a market structure where not everyone, of course, can make money, because in order for a lot of people want to have that 100x payoff, there's probably a few who are on there as exit liquidities. So I would love to know how you are thinking about, this trade-off between the stickiness that is required for a social app, because you want to have like extremely high retention, versus a trading app where, people are there because they want to make money.
Our advisor, and maybe some of you guys know him, 𝗜𝗺𝗽𝗺, he's a big personality on Twitter. He's known for creating like ultra viral social apps that go from like 0 to like a few million users in like 10 days. He basically he's actually like, somewhat adjacent to crypto. Like he keeps up with the industry, and he keeps up with like all of these meme coins and stuff. And he basically said that trading, in his opinion, is 51% flexing and 49% profit. He argues that people actually like trading meme coins and sharing their trades more because they want to flex any massive gain, or they want to like share loss porn if they lose a ton of money, than the actual profit itself. That being said, like obviously it's great to have both. It's great to flex and great to make a ton of money. But I would say one thing that we captured well with Vector, you might potentially lose money, and that sucks, but at least you have the social component that you can still hold on to and flex all of these cool trades that you've made. And in a way, you're effectively paying, you might be losing, a bit of profit because, maybe you're not as good of a trader as some other folks, but at the very least, you still get value out of the entertainment from the social aspect of it.
If it plays right, this sounds, and if there's one mainstream application, it might be this. So I'm curious to see how it plays out in the upcoming months. With that, I have one last question. What does your day-to-day look like, Richard? Are you still coding? Are you reviewing code? Are you still architecting?
Yeah, it's drastically changed in the last couple of months, basically when we went from maybe like 4, 5, 6 engineers to 10 to 14. And I think like the company is at a point where my time is no longer best spent writing code all day. I still do write code. Like there are a few things that I might fix here and there that I notice in the code base. I definitely review code. Not every PR, because there's like 14 people churning out code every day, and there's no way I could do 14 full-time engineers worth of PR reviews every single day. But it's very important for a CTO, for anyone who is in management at a company, to still be in the weeds, in the details, know exactly what's going on roughly in the code base. And I would say I have a pretty good understanding of the code base overall. Like I could literally jump in and start writing code, but my time isn't best spent there. At this point, I'm context switching between doing these calls, doing product planning, doing higher level strategic planning with my co-founder. That it's just hard for me to get heads down time to churn out like code at an effective speed. And so to answer your question, I would say most of my time is spent planning and architecting, making sure that all the difficult problems on the engineering and product side, I can be there and solve them as fast as possible. I am essentially the firefighter on the product side. If there's uncertainty around an implementation, around a product feature, then I'm there to put out the fire.
Thank you so much for joining us, Richard. This was fantastic. Listening to the actual stories from the trenches. People only see the other side of the chart. What actually goes on behind the scenes to keep it running is a ton of sleepless nights, and I'm pretty sure lots of coffee and Red Bull. But thank you so much for building such a great product. And thank you so much for joining us on this podcast.